All right. Um, it's the 11th of September 2024, and we're going to be doing the analysis for gold for the New York session. The New York session opens in about 20 minutes from now. Today is CPI, so we can expect a lot of volume during CPI, and that's about a little less than an hour from now. About 50 minutes from now is CPI news. So let's get straight to the charts. Yeah, let's go straight to the charts. Okay. Uh, this is the daily time frame. The yellow lines, as you can see, are weekly support resistance lines. I've spoken about these in the earlier sessions. These lines don't change much. They kind of stay the same for several weeks, for even several months. They stay exactly the way they are. And as we can see, price is bouncing between 2483 and 2530. I don't pay too much attention to these lines, to the weekly time frame or the daily time frame, purely because I'm a session trader, and it's kind of pointless trying to understand what's happening on the weekly or the daily if you're a session trader, because all you want to do is find the move during your session. So my session, so the session that I trade is the first 3 hours of the New York Open. So that's 8 a.m. to about 11 a.m. New York time. And so within that time frame, even though the weekly time frame or the daily time frame, could be pushing up or down, it really doesn't matter, because during the session, the complete opposite of that can happen, right? So it really doesn't matter. To me, it's all about finding a high liquidity zone on the H4 time frame, and that's the area that I'm going to be looking to take a trade from. Okay, so we can see just on the daily time frame, we can see the price is closed above 2505, which is weekly resistance. It closed the previous day as well. It closed above it, and the day before that, it closed above 2505 as well, right? And we are pushing towards 2530. We've rejected there several times, so we don't know what's going to happen if price is going to push further, close above, and continue higher. Now, on a fundamental um, view on gold, we just had the debate yesterday, the presidential debate yesterday. That was the second presidential debate. And how the market views currently is how the market views, or at least how gold, for gold as a commodity, how it views these debates, are that if Trump is leading in the polls, then that's potentially, if he does win, then that would be good for the economy. And good for the US economy means a stronger US dollar, so which means gold would then drive down, right? And if Kamala is leading on the polls, then that means there is uncertainty with the US economy. What's going to happen with the US economy? That's a lot of uncertainty. And if there is uncertainty in the markets, then that means a stronger gold versus the dollar. So gold price is going to push up, right? So yesterday I watched the debate, and surprisingly, Kamala did really well, better than what I think the majority was expecting. She did really well. So, so there is today in the New York session, we could see a push up. There is no guarantee because there is CPI, so anything can happen during CPI. Fundamentals and technicals really don't play much of a role. It's basically grabbing liquidity to make the move, so price can go in either direction. So we're going to look at where price can go to and where price can possibly reverse from. We're going to look at high liquidity zones. Okay, so just bear in mind that that gold could push up because the debate went, I wouldn't say in the favor of Kamala, but she did do really well. Okay, right. Let's go straight to the H4 time frame. Before that, let's go to the daily here. Yeah, so we don't have any new daily support resistance level. This was the support level that was created on the daily. So we have a line there, and then the next candle that is kept pushing up. The next candle pushed up, and the one after that, this is the current daily candle, and it's continuing to push up. Okay, so let's go to the H4. Let's start from a clean chart, and let's look at the closest H4 zones near current price. Okay, so the obvious ones is we have one here, we have one right here. Okay, so that's a rally, and that's a basin candle, basin candle, basin candle, basin candle, and that's the leg out. Okay, a rally based rally. We also have something here. I'm going to just mark it for now, but let's take a closer look at that later. That's a rally, that's a base, looks like a basin candle and a leg out candle. So let's take a look at that a little bit later. Then we also have one further down here, which we had marked yesterday. Right, so that's a rally based rally. We spoke about this yesterday. That's rally, a basin candle, and the leg out. Leg in, base, leg out. Okay, so those zones are about 270 pips away. I would, because it's CPI, I probably draw a one further down as well, just because it's CPI. There, yeah. Drop, base, drop, and rally. Although this one is also a base, drop, base, and a rally, but that zone covers that area, so that's fine. So if you break below this, then price could, come further down here. Okay, I think that's good enough for our demand areas. Okay. Yeah, we'll fine tune these later. Now, we'll do the same thing for supply. We have this big zone here that has not yet been broken. So that's a rally, a base, basin candles, and that's the high of the, again, we'll be fine tuning these later. It's a rally, base, and a drop. So let's just mark that for now there. We'll fine tune these later because price has gone quite deep into the zone. So let's look for an H4 supply, H1 supply zone there. We'll refine it on the H1 time frame. It is H4 zone, but we're going to look to see if you can refine it since price has already gone quite deep into it. Then further to the left, let's see if you have anything else. Yes, there is a zone there. Yeah, let's just. Okay, so that's a rally there, and then there is a drop here. So there is a base there, but on the H4, the base is not visible. So, but still, because it looks like supply, it is supply, right? If it looks like supply to me, then it is supply. There is supply there. We just have to refine it on a lower time frame. But on H4, we have a rally, and then we have a drop, right? So there is something there. So we got to pay attention to it. Okay. So then let's start now refining these. Here, this is the most obvious one. So we have a close there at 683 and the low here at 016. 683, 016. Just copy that. Okay. Then we have this close at 001 and the low at 332. The low at 318. Okay. This low hasn't touched that, right? No, it hasn't touched this. Okay, and here we had this mark yesterday. Let's go down to the H1 time frame now because we need to see a base, and there, that's the base there, right there. So that would be 89.80, and the low is 85.57. 89.80 and 85.57. Okay, right now let's um, yeah, let's look at this area now. We've got a we've got a base there. Yeah, let's look at the H1 time frame. Yeah, we do have a base there, a rally, base, and then this mode. It's very ugly. I would want to have a look at it on the M30. It's even ugly on the M30. Go back to the H1. Yeah, it's very ugly, but there is yeah. The zone here, there's a zone here. I'm gonna do that there. This zone was taken out. There's this high here, 851, and the high here is 847. No, not taken out. So it was taken out there. We're gonna have to do that. That's it is quite ugly, but we're gonna have to. The H1 time frame doesn't help. Trying to refine it on the H1 time frame, it doesn't help because the candles are equally as ugly as the H4. And again, when I mean ugly is probably a very little volume there because they're all dojis on H1, doji, all doji candles. So we will have to draw it like this. So the close is 876 and 499. 876, 499. Okay, and here um, we have a rally and a drop right here, and this hasn't been broken yet, so we have to mark that out. 236, and the high would be 922. 236, 922. Okay, and then further here, the high would be 172 and 998. 172, 998. Okay, and above that we've got nothing. Above that there's absolutely nothing. To the left, if price continues to break above that, then we're again at all-time highs, and we've reached all-time highs several times this year. I might do it again today. Okay, let's get back to this. Okay, now we're gonna look at high liquidity zones, right? This zone broke that, so that's a high liquidity zone. Okay, this zone broke the supply here. This zone didn't break anything yet. This zone hasn't broken anything yet. This zone hasn't broken anything yet. But if you do go to the H1, we have an H1 supply zone there, drop base, two base in candles, and this big drop, this massive drop that happened on Friday, 200 pip drop from there, which was broken by that, right? So that high, this candle did not break that high, so this is not the zone, but price pulled back down, and this H1 zone did go up and break that high and continue to break this high and that high and continued high. Okay, so we're going to just keep an eye on that. We're going to put a mark there, 1444. We are going to draw a line there, 1444. We get rid of this because that high was 851 and this high here was 847. Yeah, correct. Okay, we're going to just keep an, it's very close to this H4. It's very close to this H4 demand zone, that line there, right? That H1 demand zone is very close to this H4 demand zone. So we're going to put this right here, and we're going to put this one right there. And did this zone take out anything? Well, it did this. That move took out this, but we're very deep in that zone. So I don't consider high liquidity zone anymore because price has gone right. It's taken out whatever or liquidity was there has been already consumed because we've gone right to the top. We haven't broken it yet, but we've consumed almost all of its liquidity. So I will no longer mark this H4 supply zone, whatever's left of it. We've refined it on the H1 time frame. I will not mark it as a high liquidity zone. But I will mark the one above because the one above, that zone there, took out this demand here. We came here and we pushed down and we broke that, right? That move started right here, and that's weekly resistance 2530. It's right at weekly resistance, so I will mark it there. Now keep in mind, as I've said this previously, these are zones, but these zones can easily turn into high liquidity zones depending on what opposite zones they break during the session. Okay, so for now we have a high liquidity zone here. We could potentially have a high liquidity zone here. We kind of do have one. Sorry. Yeah, this did break that, so we do have one right there, just below that area around 251444. That area. Here we had this yesterday. We had this this was a supply zone, and this move broke it. So this became high liquidity. Price did come there and did go back up. Price has never been there yet after it So because it did break this zone, this green broke this zone, I will still mark it as a high liquidity zone um, for a potential trade, to take a potential buy trade from. Yeah, so that's supply. Let's look at it on the H1. Yeah, there was supply there. Price tapped, broke. This was a zone. Price came in there, took it. Price may not, if price does come there, it might break right through this. It might not grab liquidity here because it's already done it once. But on the H4, that's a very important area because of this weekly resistance of 2505, and we've seen price play around that area many times before. Um, for I think since August, right? We've been there since mid-August. So yeah, this I will consider this as a high liquidity zone. This, no, we didn't break anything. This, yes, did. Yeah. Okay, I'm comfortable with that. Okay, now let's put this on the group. Just get rid of this. Okay. Yeah. So this is New York Open, but because there's news today, we're not going to be doing anything until 15 minutes after news. So we've got about 45 minutes to kill here. All right. Yeah. So I don't trade, or I don't look for a setup at least 15 minutes after high impact news, right? Uh, and what I mean by high impact news is one of these red folders. I mentioned this previously in the live sessions. Any one of these red folders, I wait for a minimum of 15 minutes, right? Obviously I will start looking for a setup 15 minutes after the news, but I look for potential entry. But sometimes if I don't see what if price doesn't come into a high liquidity zone, or the supply demand zone, I'll need to wait even longer, right? So we've got another one tomorrow, which is PPI. But today is CPI. Today is the big one, right? So CPI is very similar to NFP, right? It happens around the same time, but CPI always happens either on a Tuesday and a Wednesday, and NFP is always on a Friday. Okay. So let's steady. So there is daily SR above current price around 252,450. Just that one daily SR line. This is midway between these two supply demand zones, so I'm going to disregard this because price is already, it's in between a zone. So if it's in between a zone, it's not important. That is not important to me. Then below current price we have 251,650. So, and as I've said before, I always take it to the closest round number. So if it's above zero point 0.5, then we take it to 2 point, if it's above zero point 0.5, then we take it to 2516.50. Then the next one is 251350, 251350. And then here for the down, we've got 250850, 250850. And then right at the weekly resistance level, there's 250450, 250450. Okay, so that's 160 pips away. And if you were to get the one below that as well, just because it's CPI, we could have these big moves. 2497, 2497. Usually I just look at only about three. I only consider about 3 daily SR lines, 2 to 3 daily SR lines above or below current price. But just because it's CPI, we could have big moves. On CPI, price could move anything between 300 pips to 800 pips. 300 to 700. If on CPI, I've seen price move 600, 700 pips easy. So I'm not surprised by a move like that. So that's the reason I just try to at least cover a 300 pip range when giving out these daily SR levels. Now I don't trade off these daily SR levels, as I've said before. I don't consider them as part of my execution, but it's good to know that where they are. If they fall at a high liquidity zone like this, there is one right here, there is one right here, this high liquidity just at this line, there is one right there. So it's good to see those, because we could get a reaction here. We could get a reaction and price could push up. Because we have created a high here, the price has created a high here. We are pulling back, and this high was created, this is the London high, and price hasn't retested that high yet. So we could pull back, create M30 support, and then push back to retest that area, right? That's very possible. And if that does happen, that's a good 130 pip move away from this area here. So, and this is so that's the London high, and so that's around there, around that candle there, around here is the London low. So that low there. Let me just zoom in for you guys, so that I explain this quite clearly. That's the London high right there. That's the London low, right? So that low has been tested already, and price is very likely, as you can see right now, it is breaking below it, right? Because it's been tested, so it is breaking below it. It's looking for liquidity. This high has not been tested. Price tried to come up here. You can see it created a flat top. It couldn't reach here. So we could see a move where we go to retest this high. That's very possible in the New York session. Okay, within the first hour and a half, we could see that move happening. So let's get back to this. 2497. Okay. Yeah. Okay. So for Okay, so that's the analysis. Okay, so the previous daily closed above weekly resistance. Price is pushing towards next weekly resistance 2530. Price is currently reacting to H4 supply. There are daily SR above in current price and below current price at these levels. It's CPI, so be careful. For buys, if you're trading the signals of the indicator for buys, you can wait for a buy signal from one of the demand zones, or wait for price to pull back, as I explained here. Wait for price to pull back, like what it's doing right now. Wait for price to pull back, create M30 support, and then wait for a buy signal with that support at the start of that support, while price is creating that support, or after, to retest the London high, right? That's what I've said here, to retest the London high. And for sells, you can wait for a sell signal from supply, so that supply zone or the one above, or wait for price to create a new low in the New York session and wait for price to pull back and again create resistance on the M30 time frame, and then a sell signal to retest the new low that it's created. So basically what I'm saying is, if price continues to push down and create a new low, then wait for the pullback, wait for M30 resistance. So if it continues down and breaks this zone, then we delete that zone, and then price goes through that zone. Then you wait for the pullback, wait for M30 resistance. We need confirmation that price is continuing to trying to continue down. We need confirmation. That's why we wait on the M30 time frame for resistance to form, right? We don't wait on M15 or M5, and there's no need to wait on H1. That's too long. But an M30 is a great time frame to wait for confirmation. So you wait on the M30 time frame for the pullback and for resistance to form. And while that resistance form, you may get a sell signal to retest the new low that it's created, right? So that sell signal can be on the M30 time frame, or it can be on the M15 time frame. It doesn't matter, either M15 or M30, to retest that low and to even go further down. Okay, so that's the execution possibilities if you're trading the signals of the indicator. Okay. Okay, don't need that. Yeah, we've got another 30 minutes to kill here before CPI. Now, there's a lot of traders who trade news. I'm not one of them. I don't trade news. Um, I don't see the value of trading news. I've never. I used to many years ago, probably when I newly started trading, um, about 7 years ago. But over the last 5 years or 6 years, I've never traded news. I always wait at least 15 minutes after news to see a setup. And with the system that I'm I'm trading now, that I've been trading for a while, and the one that this system that I am showing here, um, I'm waiting at these areas, right? So that's a possible area that I'm waiting to take a buy trade from. That's a possible area I'm going to take a buy trade from. Again, after the news. Um, that's a possible area that I'm waiting to take a buy trade from. That's quite far away. That's a good 300 pips away. But with CPI, anything can happen. You could have a 200 pip candle easy. You can have a single 150. You can have a 5-minute or a 15-minute 100 pip or a 150 pip candle. Coming all the way down, cutting through all these zones, and then going up, right? Um, this is also, there's a lot of compression here, as you can see. This is all price is compressed in here, so price could easily cut through all of this, could cut through all of that, and you know, and then decide to go up. It could easily drop well below this. If it drops below this, if price starts to close, if if it closes below that support area, M30, if it starts to close below this, then we've got clean space here to the left, and price could easily come down further. And because this zone has already been tested yesterday, we could come to the next zone, which is down there, right? It could come down here, right? And that is a possibility. It's possible that then if that begins to happen, the daily candle is going to flip bearish, right? It's going to flip bearish, and it's going to come to 2505, to 500, then to this daily support. We spoke about this yesterday. That support is around 2497, and then this daily support, which is around 2492. Yeah, 2492, right? So 2505, 2500, 2497, 2492. If it flips bearish and if volume pushes price down, those are the areas that price can come to. So if you are getting into any sells, you got to remember to start taking partial positions at these areas: 2505, 2500, 2497, 2492, right? And if there's a lot of volume that comes in, we'll continue to push down. But if price is just coming down to make a liquidity grab, then if we push up, we'll break above 2530, because we've been testing 2530 many times before. There is H4 supply there, but that H4 supply is heavily tested. As you can see, that H4 supply there, just go to the H4 time frame. So that H4 zone that started out somewhere there, right? That H4 zone that started out somewhere there, yeah, has been heavily tested. It was tested here, it was tested here, it was tested here. So 1, 2, 3, 4, 5, 6, 7. So this zone has been tested 7 times, and that's exactly where weekly resistance is. So now it's tested it for the 7th time. So we don't know if this, for the 7th time, if this is going to hold, the supply area is going to hold, or this weekly resistance is going to hold, or if price is going to push down, right? It's going to hold and push down. Or if it's not going to hold, then we create some sort of support here, and then we continue to push up and close above it, right? Either of those two scenarios can happen during CPI. So we wait for CPI news to come out, for the numbers to come out, wait for 15 minutes, wait for the candle to close, right? So so 8:30 a.m. So 10 minutes from now is CPI news. 8:30 a.m. the candle, that's a CPI candle, and that candle will close at 8:45 a.m. New York time. So at the close of that candle, when that candle closes, when the CPI candle closes, the 15-minute CPI candle closes, that's when we can start to look for a trade. And price is coming down. It's coming down to that area that we had marked. It's coming down to this area here, because this zone here broke this zone here, broke that supply, right? So that was a drop, base, drop. I showed it earlier, drop, base, drop. So that supply zone, so those are the two basing candles. You've seen how I draw my supply demand zones. So that supply zone was broken here with this demand. It's very ugly, but price is coming there, and price has never, it hasn't been there yet. It came close, it rejected, So it's coming back now again. But if it does come, touch here, pushes up, during CPI, I will not take a trade. I'll be waiting to take a trade after 15 minutes. I'll be waiting for the CPI candle to close, the 15-minute candle to close, and then look for an opportunity. So price may come in here and go without me. That doesn't matter. Okay, but this area is important. That's why we have this thing marked here, just below that. This area is important. Yeah. I will keep this here because this is in fact, this H1 area here looks the only cleanest one from this area. This area looks the cleanest out of this ugly area that's up there. It looks cleaner on the H4. It's a rally and a basing candle and then a leg out candle. That's a weak leg out, but nevertheless it is a leg out because you got two H4 bull candles pushing up, two pushing up into that supply, two of them. So price can react here or could come further down and react here, right at this green line here. So I will leave that on. Okay, I will leave that on there just to see what happens during CPI. Okay, we've got another 5 minutes for CPI. So price has broken this low, and the next candle could push up. Very likely it could, or it could continue to, but it's not yet in this area because this zone here, this H4 demand zone, did not engulf anything, did not break anything to the yeah. Price could do this. It could push up from here, from this demand, push up to retest this. That's a good 100 and over 100 pips away, and it can continue, or it could come down. Either way, we wait. We do nothing. The reason I don't trade the news, because the next candle, anything can happen. Price can gap down, can gap down 20, 30, 40 pips. You can get slipped, right? You know, you call it slippage, but what really happens is price gaps, it gaps down, right? So if you got your stop loss there, the next candle could open under your stop loss, so that's a gap, and then could continue down or could go up. So either way, it's a very bad idea to try to trade the news candle. But this could happen. This could happen where price touches 251762, the next candle touches and then pushes straight back up here, 120 pips up. It could happen, or price could just continue down. So either way, In the next, we wait another minute and a half, but we don't do anything. We wait for the next 15-minute candle to close. So this is not the news candle. This is the candle prior to the CP. This is the candle prior to the news candle. This candle on my broker, it's 15:30. That 15-minute candle needs to close, and I want to see where that candle closes. If it's going to go up there, close up there, or if it's going to close down here. This, as I said, is not a high liquidity zone anymore. So I will not be looking to take any trades here. Further up maybe, here maybe, but right here absolutely not, because that's the liquidity there is done. It's not almost, it is done. There's probably nothing left. Whatever the liquidity was there is the move. It's what happened now. So I wasn't in that trade. If I were in that trade, if it did happen during my trading hours, that's what I would have taken. But it did not come to my sniper. It came very close, less than a pip, half a pip away, and then dropped, tanked down. Okay, so yeah, this happened during the London session. Yep, there you go, straight down. That's why you don't trade news. Boom, straight down. Now straight up. And grab liquidity right there. So don't need this. Grab liquidity there. Let's see if we continue further down. The candle's got to close. This 15-minute candle has to close. Look how price is reacting to that area, to 251444. We had marked that. It touched it, went 90 pips up, and now we don't know. Price could probably easily break this low, go further down, or go up. We have no idea what's going to happen, so we wait for the 15-minute candle to close. And as I said before, that's compression. See, price is compressed, broke straight through all of that, came right to that. And as I'd marked before, if we begin to close, if M5 candles begin to close below this area, M5 candles begin to close below this area, that's M15 and M30 support. If we start closing candles, M5, M15 candles start to close below this, then we're coming all the way down here. All right, that's the next liquidity area. We're coming down to this area here. 2505, 2504, we're coming down there. So we wait for the candle to close. All right, I'll be back in a few minutes. Got about 11 minutes, a little over 11 minutes for the candle to close. I'll be back in a few minutes. Okay, price broke below that area. Yeah, so as I said, M5 candle closed right there. Um, that's the M5 candle closed right at that support, right there. And the next candle pulled back for a top wick and continued to the next demand zone, right? So this zone is done. This price broke right through it. That was also a lot of compression there, as I said. So it was easy for price to cut right through all of that noise. When there's liquidity, price just cuts through all of that noise. Now we've touched 2505 weekly resistance, and price is reacting to that. Even though this candle closes here, it's way too much of a big candle for me to take a trade from. Yeah, I don't want 49 pip stop loss. I don't want that. So I'm gonna wait. I'm gonna wait for the next candle. Let's see what the next candle looks like. We are an hour 20 minutes away from the H4 candle close. So we have plenty of time before the H4 candle close to look for an opportunity, if there is one. Price has come to that high liquidity zone area, H4 demand. That was the first one that we drew because that was the most obvious one, a rally and a base and the move up, right? And that move up there did break this H4 zone here. There was H4 zone right there to the left. It did break it. That is why we called it a high liquidity zone area. This one here, this was broken by this, but price did come there yesterday, and it's doing it again today. If price does come here, I will take a trade here. If it does come further down, because that was yesterday's candle that we were waiting at. So I want to see price come here. If it does come here, 29 pips, 30, 34 pips. Let's see at 34 pips. So I've showed you guys is what I do. So 34, that's about 0.04. So I'm willing to lose about 15 bucks on this if price let this 15-minute candle close. I want to see how what the next 15-minute candle, if it's going to come down here, and then look to see if you get an opportunity if we come down here. But right now, this was a start of the big move. This candle was the start where price started this big move up here, 135 pips, and then continued all the way up to 140 pips up. So I want to see if this candle price will come back to this 15-minute candle. So 685092. 685092. Yeah, I want to see if price comes back, because yesterday we had drawn it here. If you watch yesterday's stream, price did not come back to this, right? Did not come back. It grabbed liquidity from 2505 from the weekly resistance and continued to push up. So we don't know if it's going to do the same thing today here, grab liquidity here, or we're going to come further down here and then grab liquidity and continue up. But it is a high liquidity zone for the reasons that we mentioned earlier, and it is H4 demand. It's actually the cleanest H4 demand that we have in this range. This is the cleanest one that we have. That's why we got it marked there. There's a one below here, and there's another one here. This one, I don't see it as a high liquidity zone. This one I do, because it broke that, but this one didn't break anything onto the left, but this one did, broke that one. So let's see. This candle closes in a minute. In a minute from now, this 15-minute candle is going to close. Let's see if we come down here. We are pushing down. 92. $52. If I do take a trade, that will be my stop loss. That's where I'm going to get out of the trade. That's my final fixed stop loss. Yeah, let's see what happens, if price is going to push straight up from here, or we're going to break down lower, break this low and come further down. Yeah, it's very likely going to break. Yeah, we are close in strong 5-minute bear candles. We are going to break this low, come further down. Yeah, we did break the low. Now price does come there. It did react. Did open one. That's one buy. If price comes deeper, I'll open another one. Look to manage my. Okay, that's it. Those are my two positions. I will manage risk. Right at that, I will manage risk if price continues to we touched the sniper. I should have placed a pending order there, but I didn't. I just want to see if price was going to come deeper, but it didn't. And yeah, so 25% of my position closed at 20 pips automatically. You can see that it closed. And then at 25, you can see, so it was two positions of 0.3. So two closed, one each, 25% from each position closed. And we are running 33, 34, 35 pips, nearly 40 pips in profit. So when you get to 50, if you don't reverse here, when you get to 50, another 25% should close. And then at 51 pips, my stops should come to break even. So I don't do anything else. Once my trade is placed, my trade manager takes over and it does the needful. Okay, so we've closed, it reached 50 pips, so we've closed another position. So we've locked in profit and stops have come to break even. So this trade can no longer be a losing trade anymore. This trade no longer can be a losing trade. And we're going to let this trade do whatever it needs to do, right? Yeah, I'm going to switch off auto trading now because we have made 0.9% on this trade. It's moved about 60 pips in our favor, and it's continuing to go up. Auto trading switched off because my stop loss has already come to break even automatically, so I'm going to just let that trade do whatever it needs to do. It can either go stop me out, or it can continue to go higher. I have no idea what's going to happen. Um, but here, this open 2519, yeah, so modify 2519 would be, if we do go up there, I doubt it, we might get stopped out. Very likely that we're going to get stopped out. But what's important to note is that price did grab liquidity from that candle. That's what's important to note, right? Price grabbed liquidity from that candle. So to me, that was my trade. That was my CPI trade, right? And probably my only trade for the day. But that was my trade, the CPI trade. So because price did not come here, this was a high liquidity zone area. We drew it back here. Usually I wait for another setup around here. So I wait for this M15 candle to close, and then I draw the fib. And I've drawn the fib several times. You guys know how I draw it now. But because price did not come to our sniper entry yesterday, I did draw it on that because that's my liquidity candle. That's the candle that caused this massive move up here, right? So it went all the way after the candle closed. This is where the next candle opened. It created a bit of a low wick at 2505 weekly resistance and pushed all the way up 114 pips. So price could do the same here. It could come to that area. There's a daily SR level at 2516, right? So what I would do is I would put my final TP there. Let me look for the round number there. 2516 is the area. If it does come, because that was the move that went right up, straight up there, and rejected that 2516 area. So at 2516 is a good area to have my final TP, but I doubt that's going to get hit because it's very likely going to come further down. Stop me out and then go either way. This trade is now a break-even trade. I did secure about 50-60 pips off this trade. Yeah, so that's about it. That was very quick volume, and in CPI that usually does happen. You get very quick volume. Now this candle closes like this. There might be another opportunity to take another buy. Depends on how and where this candle closes. I'm not going to decide anything right now. I don't even think I'll take another trade because I'm happy with what I got, so I might not take another trade. But if it does, let's see where this candle closes. We got about 8 minutes for this candle to close, so that's a lot of time. Anything can happen with this within the next 8 minutes. This candle can break this zone and close further down, or it can go up right here. So we've got to wait. We've got to wait for another 7 minutes, 7.5 minutes to see where this M15 candle is going to close, to see if we have another opportunity here or not. But those are the kind of trades I like to take. Very low risk, just about 16 pips, 16 pip risk for about a 60 pip trade, right? 60 pips, 50, 60 pips for 16 pips. That's the kind of RR I like. I hate taking negative RR. There are a lot of traders who take negative RR. I'm not one of them. I need positive RR on my trades, so that naturally, without even managing risk, without having to manage risk, my wins always remain bigger than my losses without managing risk. So if I further manage risk on a trade like I did yesterday, as you guys saw, like I did yesterday, if I further manage risk, then my losses become even smaller than my wins, right? So that's the reason for this trade manager. That's the whole idea behind using this trade manager. So when price gets to these numbers, 20 pips, 50 pips, partial positions close automatically. So I don't have to worry. It just instantly does it. You know, way more quicker, way more faster than I can ever do it. The trade manager does all of that, right? So that's the beauty about using this trade managers. I've been using this trade manager for years. I created this trade manager over 5 years ago. About 6 years ago, I created it, and I still use it. I have another version of this. You'll find the trade managers that I've used in the past on MQL5. Um, but this is the one I use for this system, this particular system of trading, taking trades at sniper entry. This particular system. This is the trade manager that I use. If you're using the indicator buy sell signals, then I would recommend the other smart keys. It's called smart keys sniper entry. That has even more features. It does everything for you. You can press the buy sell button and walk away. You don't have to be, and the trade manager will only open a trade if conditions are met. So even if you click the buy sell button, if the conditions are met, if the conditions are not met, the trade manager will not open a trade on your terminal. It will wait for the conditions to be met and then open a trade. So you can go look it up. You can go look at all the examples on MQL5. There are plenty of them. Okay, so 4.5 minutes for this candle to close. And let's see how it closes, where it closes. Let's look at the 1 minute time frame. Yeah, so we have a very nice rejection here, beautiful rejection. We created a demand zone on the 1 minute. Price did come. You can see weekly there is weekly resistance there, 2505. There is a daily SR level, 250450. We had marked those levels, and I'd shared them in the group chat. Both of these levels were shared in the group chat, and price is bouncing exactly to the pip of those levels, right? And it is pushing up. It is continuing to push up. So if you do push up, we could go there. Yeah, we are continuing to push up. So yeah, we are continuing to push up, which is good to see. Yeah, and this daily could, yeah. I will move my TP up higher to 2519 where I had it before, because I don't mind. I want to get the maximum out of this trade of the position that I have left open, and I don't mind at all being stopped out because I lose nothing on this trade. Even if I zoom in, I'll show you guys that even the commission is covered. So if you look there, the stop loss is automatically above my entry. That is, it says 8 pips, but it's not 8 pips actually. That's how the MT4 shows it at 8 pips, but it's actually 8 points. It's 0.8 pips, okay? So my stop loss is 0.8 pips or 8 points above my entry, so which covers the IC markets commission. So the commission on one micro lot, because that's all I have left now of my trade, one micro lot, is 7 cents, right? 0.07 USD. So that's 0.08. So that covers even the commission. So I don't even lose commission on this trade. And if the trade runs, let it run up here, 164 pips. Let it run right up here if it needs to run. If it doesn't run and decides to go down and stop me out, so be it. 30 minutes for the candle to close. So this is going to close a bearish candle, but with a rejection. And this is also the hour close. And the hour has also rejected, the 1 hour candle is also rejecting this area. Another minute and a half for the candle to close. And if we do, um, okay, so if the candle closes above this resistance here, right? Yesterday's ugly, or yesterday's resistance, there was a H4 supply. So let me just go show you guys. You remember that? You guys remember that? That was um, yeah, that's how we had it drawn yesterday. So if it closes here, which it will in the next 40 seconds, close above it, we could tap into that area and then continue higher, right? The next candle could tap into that area. So if the H1 candle, closes above, we could come back, tap into this area, and then continue higher. Yeah. So on the M15, now we've got that. That's what we've got on the M15. So price could come down to here and continue up. That's an opportunity. Yeah, I'm not looking to take any more opportunities, to be honest. 1073, 226. Yeah, price could come to this point here. So that's how I've drawn the fib. You guys know that I've done it several times now. So this is a high liquidity zone. Price came down here. It broke this low. This is from the start. This is the high of the candle. This is the low of the candle. So I draw the fib from the start to the end, and I've shared how this fib is created. I've done that in the first video. I'm not going to do it, and I'm not going to do it here again now. But these values I've shared, all these values previously. So if price could now, if you go down to the M5, you can see there is a demand zone there, right at the midpoint of the fib. And if you go down to the M1, there is another 1 minute kind of demand zone right at that snipe entry, which is about 250,438. So around 250,450, again at that daily SR line and at the weekly resistance line, there is a 1 minute demand zone. Price could come there and continue up, or could come there and go further and go below this fib, right? And if it does that, then I'm going to get stopped out at break even. So I'm not looking to take another trade. So once I do have a winning trade, as a rule, I don't try to take another trade, right? I don't want to end up with a break-even day when I'm already ahead today. So if I do have a loss, then I kind of give my trade a second chance or even a third chance, depending if I manage risk well. If I haven't managed risk well, then I probably stop. Like if I've reached my 1%, um, if I reach my 1% risk for the day, which I rarely do. If I do reach that, then I don't take a second trade. But if I haven't, then I give my trade a second chance. So that's what happened yesterday. Because yesterday we were at 0.4% loss, right? We had a 0.4% loss yesterday, but today, as you saw, there was a bit of a gain there, and the reason for that is there was a setup just after my session was over, and I had shared it with you guys. I had said that price could get up there, and it did. It was this, right? So this structure happened in the high liquidity zone. It broke above this, and this was within the high liquidity zone. And let me just show you the trade that I did take. Um, that was the trade. So, sorry, 279. Okay, so yeah, and that high, from the high to the low. So this, the reason it's drawn like this, because this candle came into this high liquidity area, right? To the here. This was where price came to. We had drawn this zone here. So if you go on to the H4, um, this was this entire bit here. If you go back and look at yesterday's stream, this 199 pip was a supply zone, right? And price came deep into that, and then I had this happened. This happened. This candle happened. So from this low to this high, I drew the fib, and as you can see, price tapped the sniper entry. So I got in right there. Got in right there with a stop loss of about 14-15 pips, and we got about, because it was after my trading hours, I don't hold trades. I close them as quickly as I can. 1 RR, 2 RR, 3 RR, I close the trade as quickly as I can. So that was, it dropped to about 60. I think it came to about, that was a 3 RR of 3.5 or 4 RR trade, but I got out at about, I think I got out at about 3 RR. I got out somewhere here when price touched the 3 RR level. I got out there, so that is why I had made back my I had recovered my loss and made some gains, and that is why you saw when we started today. If you go to the beginning of the stream, you will see that the net gains were positive today when I started the stream, right? So having so I am positive. I have I'm 1.62% gains this week, right? And we're just Wednesday. We've got 2 more days for the rest for the week to end. I'm not looking to take another trade and give these gains away, because there is no need to. I've taken the correct trade according to my risk. Um, I've taken the trade, and I still have a trade, and I have part of the trade still running, right? Um, so yeah. Um, now, um, open 21. Let's see what this looks like, because I want to push the TP on this as much as I can, because I really don't care if I get stopped out at break even on this trade. So let's go here. Yeah, there is a drop. These are base in candles and a drop, and price can easily come to that 21 and react. So 2521. Um, yeah, that's, if price comes there, great, I'm very happy. If it doesn't and stop me out, I'm equally happy. Yeah, so yeah, we risked. So we risked. How much did we risk? That's, we risked 0.75%, right? That was our risk. 0.75%. It was less than 1% because it was CPI. I didn't want to, because I would have taken a 1% risk on this trade if it was any other day, but because of CPI, price can very quickly spike, down or spike up very quickly. It can happen anytime within the next 3-4 hours. You can have 1 minute or 5 minute spikes, right? So I didn't want to take a trade here with a full 1% risk and suddenly have the next candle spike down and hit my stop loss and lose that entire 1% and possibly even if there was some slippage, I would have lost more than 1%. So that is why I used only a 0.75% loss, and I was willing to manage risk if price came further down. I was going to close partial positions, but we made 0.9% of that. And if this trade does run, then we leave it. We let it run. But um, I, I I don't know. It may not run. Anything can happen. It's CPI, so we can. Uh, the candle's already flipped bearish. The daily candle is flipped bearish, right? We've rejected that, flipped bearish. So we could easily come now, continue to 2500. I said this before, 2500, then 2497, then 2492. And if there is more volume, then we continue even further down to these wicks here, right? So these wicks here, price could come down to that wick there, which is around 2490, right? The 2490. It could easily happen, very likely. Um, got about a little over 45 minutes for this H4 candle to close. So this candle could close below this previous H4 resistance. If it does close below this H4 resistance, then there is no need to hold this trade because I mean, if we are still in the trade, if I'm still in the trade uh, at the close of this H4 candle, and if this candle closes below this yesterday's H4 resistance, it closes below that, then it's very likely going to go down and break the low of the candle and continue down. Very likely, right? But if you do close above, if you reject this area and close somewhere here, then we could continue up. But there is a 50-50 chance of either of those scenarios happening, just 50-50. That is why stops at break even, so you lose nothing on the trade, I lose nothing on the trade, and I let it run um, to see how far I can milk this trade. So also it's worth mentioning that So that's the New York Open. In the New York Open, price made a new low, right? We made a new low. We made the new low into a high liquidity demand zone, but still it's a new low, right? So price, that was the Asian low. Yeah, this was the Asian low. This was the London low. So that was the London low there. That was the London low, and that's the Asian low. Price broke below and this was the Asian high. Yeah, that's the Asian high. Not important because it's already been tested. So that was the London low. Price tested it, broke below it, broke below the Asian low, came down. So we made a new low for the day. Now that new low could there's an 80% chance, 75-80% chance that the new low could get retested. So where price pulls back, creates M30 resistance, and comes down to retest this low, right? There is a 75-80% chance of that happening. So if you are trading the signals of the indicator, that's one trade that's a trade that's mentioned in the trade plan, a trade to look for, because price has made a new low in the New York session. So wait for the pullback, wait for M30 resistance to form wherever it does form, here, or here, wherever it does form, and then wait for the sell signal to retest the low. That's possible. There's a 75-80% chance of that trade working out and that trade happening and that trade working out. But then there's also a 20 or 25% chance where price does not retest, or it retests just partially and then continues to push up. If this is an area where price has grabbed enough liquidity, so has created a new low for the day, grabbed enough liquidity, and decides to now continue up for the rest of the day. There is a 50% chance of that happening, and there is a 50% chance of price continuing down, price continuing further down. The new 15-minute candle has just opened. It's very likely that this 15-minute candle breaks the low of this 15-minute candle. Very likely that happens, because that's a doji. So it's very likely that this candle needs liquidity, either from above here or from below here. From below here to go further up, from above here to go further down. So it could grab liquidity from here, so which means breaks the low to continue up. And if it does break the low, it could come down another 20 pips, 25 pips, and stop us out. That's very possible. Very, very, very possible. So this 1 hour candle closed above yesterday's 1 hour H1 resistance or H4 resistance, closed above, but that is just a 1 hour. I would want to see the 4 hour, which closes in 40 minutes from now. I would want to see the 4 hour close above this resistance. This 4 hour close above this resistance. If the 4 hour closes above the resistance, the next 4 hour could come down to that resistance, grab liquidity, and continue up. It could, right? I want to see the 4 hour close. If the 4 hour closes, then that means this price is rejected, created a big wick, a liquidity wick, and rejected this area. And then, yeah, that would be this one would have to come further down here to create that liquidity wick, because this is not enough of a liquidity wick for price to push up. Price would have to, so which means the M15 low would have to be broken. Price would have to create grab liquidity further down, which means the 1 hour would have a new low somewhere there, and then push up. That would be a liquidity wick. That would be grabbing liquidity. Similar to what happened here yesterday. See that? That's a liquidity wick. We spoke about this yesterday. We spoke in length about this liquidity wick yesterday. For 60 pips and grabbed enough liquidity and then pushed up. So if price is to do a similar move, then a similar liquidity wick is required. Price would start breaking M15 lows. Here, the next candle breaks this low, comes down further down, grabs more liquidity, creating a bigger H1 wick, and then pushes up. Stop loss on this trade was 13 pips. 13 pips. Yeah, I kind of calculated it. Yeah, actually, I made a mistake in my calculation. My lot size should have been much bigger because that stop loss there, let me just zoom in. My calculation was a little off, but it was lower risk, so which is always good. So here, I calculated it from there. I, I, because of the amount of lines there, I just thought that was the sniper entry. I calculated it from there as 30 pips. So I took my stop loss as 30 pips, but my stop loss is 14 pips. 14 pips plus spread. So 14 pips plus, so that's 18 pips, right? So 18 pips, if I was losing some maximum loss of $15 on that trade, that is 0.08, and I opened two positions of 0.03 each, so that's total of 0.06. I should have opened two positions of 0.04 each, right? And then that would have been a bigger gain for me, but I accidentally calculated it there and took that trade, no problem. So less risk is always better, always better. So if I had opened a 0.4 position, I would have, instead of one micro lot, I would have had two micro lots running here on two positions of two micro, because one I accidentally closed. So there is, I have only one position of one micro running here, one position of one micro lot running here. But any which way, that doesn't matter. I'm always happy, always happy to take lower risk than higher risk, because that's the only thing that I can control in trading. I can't control anything else. I can't control what price does. I can I can I can make assumptions of what I can weigh probabilities and make assumptions of what price might do, but I have no guarantee what price will do. The only thing for certain that I can do in trading is there are two things that I can do. For certain in trading, two things that I can do for certain. I can lower my risk on a setup, and I can manage my risk when I'm in drawdown. Those are the two things that I can do. The rest, I have no control over. So this 30-minute candle is gonna close in 6 minutes, but that really doesn't matter because that's not the 30-minute of the hour close. So that 30-minute closing bullish really doesn't matter because the next candle can always come down and grab liquidity from below that candle to continue higher. So that really doesn't matter if this closes bullish or not, or where this closes, because it's not the candle that ends the hour. Right? The candles that end the hour, the 15-minute candle or the 30-minute candle that end the hour, or the H1 candle that ends the 4-hour candle, the close of the 4-hour and the 4-hour candle, those candles are important. Yeah, so if price closes somewhere here or here with no top wick, then the next candle can easily push down all the way down there, 85, 90 pips to create a low wick, or continue down. Okay, I'll be back in a few minutes. I'm going to let this trade run. We got um, about 35 minutes until the 4-hour candle closes. So I'm not looking to take any trades. We got 35 minutes for the candle to close. I'm just going to be here until the next 4-hour candle opens, and then maybe just go off, just go end this stream because I'm not looking to take any more trades. This is what we had initially. This was the idea. It was a very clear idea. We had a high liquidity zone marked out here. We had one marked out here, and we had one high liquidity zone marked out here. Okay, we had three high. If you go back to the beginning of the stream, there were three high liquidity zones marked. One here, which was very ugly. We mentioned that it was really ugly. This was the best one because in terms of proximity to price, this was the best one that we had. It was aligned with a daily SR with a daily SR level and with the weekly resistance, so it's perfectly matched. There was H4 demand. It was a high liquidity zone. There was weekly resistance. There was a daily SR level. Everything was there, right? So this was the best one, and then there was one down all the way down here. So we were looking to take a trade from any one of those three, and we got one from the one that we wanted, that we liked the most. We got a trade from I got a trade from the one that I liked the most. And then in terms of supply, there is a high liquidity zone. There's just one, and there's one high liquidity zone above here. This isn't a high liquidity zone yet, and if this would become a high liquidity zone only if price breaks this move, the next H4 candle uh, wicks up, comes down, breaks this zone, then that becomes a high liquidity zone. Until then, this H4 is not a high liquidity zone. So you got to keep that in mind, that uh, the next H4 candle can wick up and come down and break these lows and making that a high liquidity zone for the future, right? So that's very possible. Price can continue bearish today. Very, very possible. 50% chance the price can continue bearish. 50% chance the price can continue bullish. So having said that, you can see price is rejecting that area already. This was the 2512.78 exactly to the pip. It's rejecting. That was yesterday's area, right? We pushed up. That was exactly the area where price created support to continue up. So it went up, we broke up, came back down there to 1278, created support to go up, and now that's exactly what's happening. Price is creating, price is rejecting that area. So it's very possible that price rejects this area and continues down. Um, yeah, very possible. We are rejecting that area. You can see wicks on the 1 minute. On the 5 minute, we have a very clear rejection, price pushing down from that. Um, yeah, I may close this trade if price doesn't begin to close above this. I may just close this trade because once it starts to reject, the 30-minute has already rejected that area. The next 30-minute could push up and then continue down. So wait for the next 30-minute to come up a little bit, and I might just close that trade because we are rejecting. That's an area that we are rejecting. Once price begins to reject this area, that could be a signal that price is going to continue to move down now, right? And I I don't want to be holding a trade when I know there's a very high chance of that happening. I don't want to be holding a trade. We are rejecting. So the move up was yesterday's move up was from this fib here, went right up to 25128, and that's exactly where price came to the pip, touched there, rejected. So we are pushing down very hard from that area. I said this, that this price could easily break the low of this 15-minute candle. And that's exactly what's happening right now. We are coming down to very possibly break the low, and we are probably do that right now. Come down, break the low, and then either continue down or maybe push up a little bit. Let's see what happens. But we are rejecting that area. We are coming down. Price is coming down. So yeah, so that's a 30-minute. That's the that low is going to get broken. That 30-minute low is going to get broken before anything else happens. This low is going to get broken, right? Yeah, it did right now. It broke it right now, and it's now testing 2505 again. Now, if it does push up from there and comes back up here, I'm going to close the trade because this 30-minute has rejected that area. We are coming down. So just waiting for price to create a top wick. Yeah, there's a very strong push down on the M5. We are coming down. Yeah, so we're probably going to get stopped out here. Very likely that we're going to get stopped out at break even. Yeah, so we broke the M15 low as expected. We broke the M13 low as expected. And now price is going up to probably create the top wick to continue down. So somewhere above here, this was the open of the M30 candle. Above here, we want a top wick, or we're probably going to get stopped out right now. Yeah, we're going to probably get stopped out right now. So I'm going to close this trade. If you draw your levels right, gold is a very technical pair and it works beautifully to the pip. That's resistance and touched it, a pip, and pushed down. So that would be in a good area to, if I had a larger position open, to close majority of the position off, but we have already closed a lot of the position. There's nothing left to close. So either close the entire position here or close 90% of the position because this is resistance, right? To the left, 30 minutes, that is resistance. It's exactly resistance there. Support, turn resistance. SR, that's why we call it SR, because previous support, turn resistance, right? support, turn resistance. So that's um, that's very important to identify those areas. Now, that's the high, the current high of the candle, M30 candle. Price breaks above it and creates a top wick and could easily push down. So once we start, once price breaks above this, uh, and I see the first M1 1 minute bearish candle, I'm going to close my trade because we've rejected this area heavily, and I have I have no idea what's going to happen, if price is going to continue higher from here on or just continue lower. Very likely it'll continue down. Very likely. So there is no point in holding this trade. Just want to see a top wick first, and then we close the trade. Um, some traders trade only support resistance. That's absolutely fine. There's nothing wrong with that. But I always say it's good to have an understanding of supply demand as well, because supply demand works like a charm. So a lot of traders don't believe in supply demand because supply demand is not as easy as understanding support resistance. It's not at all. It's very difficult to draw supply demand zones correctly. It takes a lot of practice. So drawing support resistance, you can learn it in a week, to draw support resistance. But supply demand takes a lot longer, because the reason for that is because of there are base-in candles, and base-in candles, um, as you've seen in the last three sessions, the last three New York sessions since the beginning of this week, how I've drawn them. They can't. There is no fixed rule when drawing, supply demand zones. You got to. It's experience. But for support resistance, um, you can you, you can you can have rules to draw support resistance zones. I mean support resistant lines. But for supply demand, there are no rules. It's just experience. Okay, so we're breaking above this candle, which is we're creating a wick here. So the M30 is creating the wick now, the top wick. So let this candle close, and soon as this candle closes and the next candle opens, um, yeah, this high is 765 and this high is 767. So we did create a top wick right now. We did create a bit of a top wick, but price usually is going to come and break that up, break that top wick to go further down. It usually does that. So I'm just waiting for price to get back up there and then close the trade. Only because we have a heavy rejection from this resistance. Price dropped almost 100 pips from that M30 resistance. So yeah, almost there. No bottom wick, could continue down. If price breaks this, then we can continue a little further up. If it breaks this high, if this candle breaks this high, we could continue a little further up. Or if the next candle breaks this high, we could continue further up. Yeah, this candle closes, next one. Yeah, there we go. Okay, close the trade. Now price could go straight up there and continue higher or come down. I have no idea. But I'm done. That was my CPI trade, and I'm done. 1.13%. Not too shabby at all. Um, yeah. Now, if I hadn't taken the earlier trade, this would have been a trade that I'm in, right? Price came to sniper, and see the sniper. We marked this candle, and I would have placed pending orders there, waited, and price has come there, touched there, and can you see it's pushing up? It pushed up 30 pips from there. So let's go back. Let's go down to the 1 minute time frame, right there. We pushed up 34 pips. So if we had placed pending order at sniper entry, 2504.38, partial positions would have already closed. So I hope you guys can see the value of drawing the fib the way I draw it here in a high liquidity zone. I hope you can see the value in it, right? The way it was drawn yesterday, how it worked today, the way it was drawn here, and how it worked. If you watch yesterday's live stream, how this worked perfectly and dropped 140 pips, right? How this worked today from sniper and went up 100 pips, 103 pips, right? Right from sniper, 103 pips. So 13, 14 pips stop loss and 100 pips up, right? Here, I think it was like I don't know, 10, 10, 12 pips stop loss and dropped to 140 pips. Then on Monday, here, which we didn't get triggered. So if you go back on Monday, this was trade on Monday, right? So there was, I think, a 15 pip stop loss and dropped 100 pips again, right? You can see how high, how valuable these setups can be because of the RR that they offer. So this unfortunately didn't trigger. I missed this trade by a pip. It didn't come to my entry. By one pip, I missed it, and it dropped 100 pips, right? So, but then I did get one in here yesterday, which was about 4 RR, but I collected about 2.53 RR on this trade. Then today I got this move. I got that move here, and then it's happening again here on this M15 candle. Fib is drawn, and price is pushing up, right? Price is pushing up, and we are pushing up. So 38 pips, 40 pips, easy. Continue to push up. If price begins to close above this minor resistance, there M5, this minor resistance which is there, you can see that. Let me just zoom in. Here there is resistance, right? So if price begins to close above this candle and this candle, if an M5 candle closes above this and this, then we're going to continue all the way up here again because we've got clean space, right? So that's if you were scalping, you'll be looking for those opportunities. Those are not. I I I'm not. At least I'm not doing it today because I'm done for the day. But that's how you read price. You read candles. So, but apart from reading price and candles, it's also important to note that if you have a system that makes use of reading candles and price correctly, a system that can make use of it by uh, a system that can make use of getting good RR. That's what I'm trying to say. It's great to read candles and read price, but if you don't have a system that can make use of that knowledge um, to gain good RR, then I mean I don't see much value in it. Okay, so reading price, reading candles is very important. Is very 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 important, but it has to lead to high RR trades or good RR trades. It doesn't have to be high RR. It could be a 1 to 2 RR trade or a 1 to 2.5 RR trade or even a 1 to 1.5 RR trade. So that means um, the system itself or your trade plan itself gives way to bigger wins and smaller losses just by the definition of your by definition of your system or your trade plan. You already have that built in that the trades that you take are high RR trades. You don't take negative RR trades. So then with that, if you also can read price, if you can read candles, if you can read candles really well at key levels, then that's an added advantage. All right, I'm gonna end this stream in a few minutes because I'm not looking to take any more trades. We've got PPI tomorrow. It's another important news day. It's maybe not as big as CPI, but it is very important because those are the only two news events for the week. So when they are the only two news events for the week, they can hold significant volume. Just like CPI did, because that's a CPI move. That's a 200 pip move, right? Now we don't know what's going to happen here. Price is just ranging to continue down or ranging to continue up, or collecting liquidity to go up, or ranging to continue down. I have absolutely no idea what's going to happen here. This 5-minute candle is closing above, could close above this resistance, and if it does, then we could continue back up here. If it doesn't, it's not, then we could probably go further down, right? It didn't close up because this is also that was the 15-minute candle close. So we have a rejection there though. So if the next candle breaks this high, then we can continue higher. Yeah. So if I didn't take the previous trade, then this would be the trade that I would have taken, and that would have been a winning trade too, because that trade would be up 40 pips. My stops would come to break even only when the price reaches 50 pips, but now partial positions would be closed, and if the price comes somewhere here, then stops would come to break even, right? So if I didn't get in on the previous entry right here at this 250240, that's where I got in. As you guys saw, that's exactly where I got in. Then I would have taken this candle here. The fib was drawn from the start to the end. You guys saw exactly how it was drawn, and price came down to the pip 2504, 38, 35, whatever there. And I said, if you remember, I said that there is an M1 demand zone there, M1 demand zone here. If you go to the 5-minute, you can see resist support there, you can see support there, and the price came exactly to that support, and you can see price is pushing up 48, 49, 50 pips. Yeah, 50 pips, perfect. So if I did get in on that trade, that too would be a winning trade. So I want to re-emphasize the value of learning to draw the fib the way I draw it, and taking trades, waiting for those pullbacks, and taking trades at that level. With this, to me, is as I say over and over again, this is the low risk, high probability, high risk, high RR trade, right? Low risk, high probability, high RR trade. This, I've traded many systems. This is the one that I like the most. This is the low risk, high probability, high RR trade, right? So you would be risking what, 20 pips here, and you're up 53 pips already, right? So it's not the breakout. I'm not a breakout trader. I'm a pullback trader. I wait for price to come to me. I never chase price. Breakout traders, by definition, are traders that chase price. I never chase price. I wait for price to come to me. If it doesn't come to me, then so be it. Then I wait the next day. I do the same thing the next day, and I wait for price to come to me. And I've always done that, and I see the value of doing that, right? Because my stops are tight, right? And I wait for price to come to me, and then either manage risk when I'm in drawdown, or let my trade manager take over and do the rest. All right. Um, yeah, that's a shorter session today. Just a couple of hours, just a little over 2 hours. But that's it. So I'll be I'll be here. I'll be back tomorrow, and I hope this session was of value. That I was able to share some value here. That's the purpose of these sessions, to add to share value. That's the only purpose of these sessions, to share value, to just share what I have learned, what I know, and how I trade. I trade quite differently to a lot of these traders on out there who do live streams, who have Twitter, who post their trades on Twitter and Instagram. I trade quite differently to a lot of them. Um, I've always been a supply demand trader. I went to school to learn supply demand, right? Proper school to learn supply demand. So that's how I trade. Um, all right. So back tomorrow for PPI tomorrow, and we're going to do the exact same thing. We're going to be looking at. We'll start off exactly like we did today, even though this is of not much use at all in our trading, but we will nevertheless go through the process, right? But as I said, I don't use any of this in my executions, but we will do this, and then we will go down to the daily and look to see if there is a new daily SR level, and then we will draw our H4 zones. And once we draw our H4 zones, because that's what's important to me, we draw the H4 zones, and then we check which one of those H4 zones are high liquidity zones and which ones are not. And we wait at the high liquidity zones to take trades. Simple as that. The high liquidity zones will always be at the extremes of price. So this one, as you can see, this was your range. Look at the 280 pip range. We waited at the extreme to take a trade. And now this is the extreme. So depending if this turns out to be a high liquidity zone, then we wait here in the future to take a trade. Okay, that's all it is. That's all trading is to me, at least. All right, guys. Be back here tomorrow. Good night.